Hi looters, welcome back to Tick to Loot market updates for July 28th, 2026. We got a jam-packed episode covering yesterday's moves, today's key data releases, and the headlines shaping sentiment across the globe. First, a quick reminder. This video is for educational purposes only and is not financial advice. Markets carry risk. Always do your own research and consult a licensed financial advisor before making any trading decisions. Let's jump in. Starting with yesterday, the German IFO Business Climate Survey was slated at a low-impact level. Analysts expected the index to edge up to 86.1 from 85.6 in the prior month. The actual number hasn't been released yet, so the market is still waiting. Even a modest rise can hint at improving confidence among German firms, which may support the euro if the data comes in stronger than the modest forecast. Because the event is low impact, any surprise is likely to be absorbed quickly without big swings. Also on the euro side, the M3 money supply and private loan growth numbers were scheduled. Both carried low-impact flags with forecasts stuck at 3.2% year-over-year for M3 and 3.1% for private loans, matching the prior month's readings. No actual figures have been posted yet, so traders are holding a neutral stance. Consistent money supply growth usually signals that the European Central Bank policy stance remains unchanged, keeping euro-related yields stable for now. Across the pond, the UK's CBI realized sales data came out with a low-impact rating. Forecasts called for a -45 index versus a -54 reading in the previous month, suggesting a modest improvement in retail sales momentum. The actual number is still pending, but the expectation of a less negative figure could ease concerns about consumer weakness in Britain, especially after the recent services PMI surprise that showed a bounce back. Moving to today's calendar, the Bank of Japan will release its core CPI year-over-year figure. The market expects the rate to stay at 1.4%, unchanged from the previous month. Though flagged low impact, any deviation could influence the BOJ's stance on its ultra-easy policy. A higher-than-expected core inflation reading might add pressure for a policy shift, while a lower number would reinforce the current accommodative environment. Traders are watching the release for subtle clues. Next up, Spain's unemployment rate is on the docket, also low impact. Forecasts point to a decline to 10.1% from 10.8% in the prior month, indicating a potential easing in labor market strain. If the actual rate confirms the drop, it could lend support to the euro as the eurozone's largest economy shows signs of resilience. Conversely, a miss would keep the euro under pressure, especially if other eurozone data stay soft. Germany's BUBA monthly report is also scheduled today. The release carries a low-impact tag, and no forecast numbers were provided, so the market is largely in a wait-and-see mode. The BUBA report gives a snapshot of credit conditions and loan demand, which can hint at the health of the German banking sector. Any surprise, positive or negative, could ripple through the euro, but given the low-impact rating, any reaction is likely to be modest. On the U.S. side, the ADP weekly employment change is slated with a low-impact rating. Analysts expect a modest increase of about 16.5 thousand jobs, matching the previous release. While ADP isn't the headline jobs number, it can provide early color on the labor market ahead of the official payrolls report later in the week. A figure that deviates sharply from the forecast could spark a short-term move in the dollar, but the low-impact designation suggests any swing will be contained. Also for the United States, the goods trade balance will be released. Forecasts anticipate a deficit of $100.3 billion, a slight improvement from the prior $105.8 billion shortfall. A narrower deficit can be seen as a supportive factor for the greenback, indicating that export demand may be holding up. However, with a low-impact flag, traders will likely view the number as a data point rather than a market mover unless the surprise is large. Turning to headlines, Oman has floated a proposal to Iran for joint management of the Strait of Hormuz, and it's gaining regional backing. While the diplomatic move is still tentative, any progress could ease shipping tensions in a key oil corridor. Traders keep an eye on such developments because smoother oil flows can temper price spikes, which in turn affect risk sentiment across commodities and currencies. Oil prices have pulled back from recent highs, giving markets a breather as we head into the final stretch of the week. The retreat follows a mix of easing Middle East tensions and profit-taking after a strong rally. Lower oil prices can lift risk-on sentiment, supporting equity markets and risk-sensitive currencies like the Australian dollar, while also easing inflation concerns for commodity-importing economies. In Europe, the latest flash PMI data shows the euro area business activity rising for the first time in 4 months. Services PMI came in at 51.6 versus an expectation of 49.8, while manufacturing posted a solid 52.0 against a 51.5 forecast. The composite PMI of 51.9 beat the 50.3 consensus, suggesting a rebound in demand conditions. Analysts see this as a positive sign for the euro, though the market will weigh it against the broader backdrop of modest inflation and steady monetary policy. To wrap up, yesterday's low-impact euro data kept the currency on the sidelines while the UK's retail sales hinted at a softening but improving trend. Today's calendar offers a suite of low-impact releases that could provide subtle direction, especially the BOJ CPI, Spanish unemployment, and the U.S. ADP numbers. Meanwhile, headlines around the Strait of Hormuz and easing oil prices are helping to calm risk sentiment, and the Eurozone PMI surge adds a touch of optimism for the single currency. Remember, we're just analyzing the data, no trading recommendations here. That's it for today's Tick to Loot market update. Looters, if you found this breakdown useful, smash that like button, hit subscribe, and ring the bell so you don't miss tomorrow's fresh analysis. As always, stay curious, stay disciplined, and trade responsibly. See you tomorrow.